Good morning, students. Myself, CA Vibhavadhavan. So, welcome to the sessions of Cost and Management Accounting. Today, we'll be starting the cost sheet, a very important statement to record the cost and cost information. So, this is where we have to. It's a basic statement where all the data is compiled, all the cost records are compiled, all the cost information is compiled to basically calculate the profit and the loss later. All right. So good morning, all of you. A lot of students have joined. Good to see so many students. Good morning. All right. So let's start cost sheet. Okay, so this is the overview, the functional classification, which we have already done in the introduction part. Heads of cost in cost sheet, what all landmarks are there, what are heads are there, format of the cost sheet, and of course advantages. So then what is a cost sheet? Basically, cost sheet is a document which provides a detailed cost information. So the information are presented on the basis of functional classification. So we'll be understanding how we have already discussed the classification of cost, element wise, functions wise, variability wise. So here it will be element plus function both. So ascertainment of cost includes element-wise collection of cost. That exactly I was referring to. Element-wise means material, labor, and then expenses. Accumulation of costs so collected for a certain volume or period, then arrange all these accumulated costs into a sheet as per the classification, functional classification, so that we can calculate the total cost. All right. Functional classification of the elements of cost. So the elements of cost, we have to classify them, into functions also. Production or manufacturing cost, administration cost, selling cost, distribution cost, research and development cost, etc. So there are many functional classifications according to which we'll be making the cost sheet. So cost heads in a cost sheet, these are the major landmarks in a cost sheet. So you have the prime cost, you have the cost of production, then cost of goods sold and cost of sales. So we'll be understanding these heads, the major landmarks in detail, and then we'll be, just applying them into the illustrations. Good morning, students. Good morning. Need to learn contract costing. You please check the syllabus. All the modules are there in the syllabus. So first head of costing, which is called the prime cost. Prime cost represents the total of direct material, direct labor, and direct expenses. Prime cost is nothing but the direct cost, right? So all the three elements of cost under prime cost, material, labor, and expenses, there are three elements of cost, and the direct elements are called as prime cost. So direct material is basically what we have to take here. Direct material we have to take here. It is material consumed. So cost of direct material consumed. Here we have to take the material consumed, actually used for the production. So opening stock, add additions or purchases, less closing stock. So this is, we have to calculate how the raw material consumed or direct material consumed. Opening stock, add purchases and less closing stock, and whatever expenses are incurred on the material, we will add it. We have already done the valuation of material, the valuation when we purchase the material, clear? So whatever is incurred on the material purchase, we will be adding it here, all right? Similarly, the way we have done valuation of material in the material module. Then we have the direct labor cost. Then we have the direct labor cost. So it is the total of payment made to the employees who are engaged in the production of goods and services. Again, we have done the employee module also. So what all is included in the employee cost, not earnings, labor cost. So wages and salaries, allowances, payment for overtimes, bonus, employees' contribution, whatever employer is incurring on the employee. whether or not, it's in cash or in kind, whatever benefits the employee is getting, everything is a part of employee cost. So direct employee cost, again, whatever is being incurred on the direct employees, the direct factory workers. Then direct expenses, we have done direct expenses, which has been incurred directly for the manufacture of any product. All right. So those are direct expenses. So expenses other than material and labor, which are incurred to manufacture a product for the provision or service, they can be directly traced in an economically feasible manner to a cost object. So power and fuel, steam, direct cost, royalty, direct expenses, higher charges. If we are hiring a specific equipment, that is the higher charges. Fees for technical assistance and know-how, which will be directly have an impact on the manufacture. Amortized cost of molds, patterns, and patterns. Molds, when we have to get something into a structure or a shape or a form. So molds and patterns. Cost for product specific design or drawing, for specific software. So any other expenses which are directly related with the production of goods, directly related, those are direct expenses. So direct material, direct labor, direct expenses forms part of the prime cost. So prime cost is the first head of cost or the first landmark in the cost sheet. Yeah. After direct cost always comes indirect. Indirect we call as overheads. You must have done overheads by now. So overheads are all the indirect expenses, indirect cost. So if it is a total of prime cost and factory related cost and overhead. So cost of production is to the prime cost we add. So see, cost sheet is a continuation sheet. It's not that, okay, prime cost is done, then you start the next point. No, cost sheet is in continuation. So we have calculated the prime cost. To the prime cost, we add now the indirect cost. Clear? So prime cost is basically the direct cost. Prime cost is the direct cost, direct material, direct labor, and direct expenses. So whatever is the prime cost, you add to the prime cost. It's in continuation. You add factory overheads. So after prime cost, all the indirect territory starts. All the indirect cost will start, but indirect cost will be as per the classification. You cannot just dump all the indirect cost at one go. No, you have to classify. So step by step, we will be adding different classification of indirect cost, which is called as overheads. Clear? So first overhead has to be factory overhead. You cannot disturb the sequence. You cannot change the sequence of the cost sheet. You have to follow the sequence of the cost sheet. The format you cannot change. So first overhead has to be factory overhead. Then you will get the gross works cost. To the gross works cost, we will adjust the second stock, WIP, work in process. That means semi-finished goods. Opening stock we always add and closing stock we always deduct. Here, first stock was raw material. All right. So there are basically three stocks we'll be adjusting. First stock was raw material. Now WIP, work in process, that to semi-finished goods. So that is adjusted at the stage of gross works cost. Then you get the factory cost. So factory or works means the same. Factory cost or works cost. Clear? After works cost, we have to add certain overheads. Quality control, research and development cost only when it is required for the manufacture or production. So process related. Any R&D cost, let us say if we are doing R&D for market research or market survey, then this R&D you will not add over here. Only the research and development expenses which are incurred for the enhancement or improvement of production or manufacture or process, not for any other expenses. So if R&D is incurred for any other expenses, then you will not add it over here. Here only when it is related to manufacture or process. Clear? Then administrative overheads only related to production, not general administration. If I'm giving salary to rest of the employees, if I'm giving, salary to the general manager, that salary will not come here. So administration expenses only which are related with production area. So any administration cost, office and administration, which is related with the production. Anything you are paying to a person who is related to production, that administrative overhead will come here. Credit for recoveries. If I'm selling any scrap, all right, or any byproducts are there. So any sort of miscellaneous income out of the production we are getting, that will be deducted. All right. So this is a deduction. Then packing cost, primary packing. Let us say fruity packs. Fruity packs have to be come in the Tetra pack. You cannot supply fruity open. It's a liquid. So anything in liquid form or anything, whatever the primary packing, you cannot sell it loose. Clear? Everything, every product comes in some basic packing. Milk basic packing to chahiye. Then let us say 1000 fruity this Tetra pack are in the one big carton. That one big carton is used only for distribution purpose. कि fruity को distribute करना easy हो जाए. वो carton secondary है. But the fruity Tetra pack in which you get the juice, so juice bottles, juice Tetra pack, they are the primary packing. Without that, you cannot sell. So that is the primary packing that you have to add it over here. But anything extra packing, which you are doing only for convenience sake, so that they can be transported from one place to another, that is not primary packing. That will be secondary packing. Clear? So these four items you have to add: quality control, R&D, process related, administrative related with production, credit for recoveries, and packing cost, which should be primary. Secondary will be part of distribution, logistics, transport. That will be added later. So this we get the second important landmark, which is cost of production. So to the prime cost, zoom the screen, okay? Let me just zoom the screen. I think now it's visible to you. All right. Now I hope it's visible to you. Yes. Toothpaste or any product which you are getting, that is primary packing. So I think now it's visible. The screen is visible. I have zoomed it. So to the prime cost, you add the factory overheads, then the opening and the closing stock of WIP, that is work in process. Then you get the factory cost. Then to the factory cost, we will add in this, we'll get the second landmark, which is cost of production. Clear? Let's move on. So factory overheads. What are factory overheads? Anything related to works or production or manufacturing. So you can use any of the term. Factory overheads, you can use that works overhead. You can call it production overhead. You can call it manufacturing overhead. Any terminology, they are similar. All right. They are all the synonyms of the word. Now, includes all the indirect costs. Overheads are indirect only. Consumable stores and spares, they are all factory overheads. So every other thing which is happening in the factory but not directly related is indirect factory. Clear? So consumer stores and spares, depreciation of plant and machinery, factory building, lease rent of production assets. See, every item will be related to the manufacturing or shop floor only. Clear? No expense here should belong to selling or distribution, all right, or office. Everything should relate to factory or production area. Repair and maintenance of plant, machinery, factory building, indirect employees cost related with production activities. So indirect employees, if you are paying anything, that is again factory cost. Drawing and designing of department cost. All right, that's a department, not the product. Designing and drawing of product will be direct expense, but that for the department will be the indirect. Insurance of plant, machinery, factory, stock of raw materials. So all the insurance expenses of anything in the factory, indirect. Amortized cost of jigs and fixtures. So small those tools and fixtures also. Service department cost, tool room, engineering maintenance. So any other service department which provides services to the production area. Let us say, machine kharab ho gayi ya kuch tools chahiye, whatever. I mean, they are in coordination with the production department. So the cost related to that also will be part of factory overheads. Clear? Okay. So stock of work in process, the stock we adjust, opening we add and closing we deduct from the factory cost. So what exactly is this? The cost of opening and closing WIP is adjusted to arrive at factory works cost. And this value of WIP will be based on completion of the percentage of completion in each element of cost. So this valuation of WIP, we will be studying in a different module, process costing. So from there, the value will come. So stock of WIP, we adjust in the cost sheet. Quality control cost. So all the resources consumed towards quality control, which I explained, R&D, it should be related to improvement of process, product or service. Clear? It should not be related to anything which is not related to production or product. So administrative overheads, they include which are related to production. General administrative will not be included here. It will be included later. Clear? Here only administrative expenses related to production will be a form part of cost of production. Clear? Any general office administrations, will be adjusted, but later, not in this section. It will not be a part of cost of production. Here, everything will be a part of cost of production. Credit for recovery. So any realizable value of scrap or waste, it is deducted because it's a miscellaneous gain to you. So we deduct because it will decrease our cost. That is why such miscellaneous income we deduct. Packing cost, I to explain you, it should be a primary packing, which is essential to hold and preserve the product for its use by the customer. So you cannot, use, you cannot market the fruity in loose. It has to be in some primary packing. Joint products and byproducts, sometimes joint products are also there. So they are allocated among the products on a rational and consistent basis. And byproducts, whatever you sell out of byproducts, again, sometimes in every production, some byproduct is also left, which can be sold. So the value of the byproduct is very insignificant. So if you are getting anything out of that byproduct, that will be a deduction. That means that's again decreasing your cost. So you're getting some sort of a miscellaneous gain out of the production. So this is the explanation of what all we will be adjusting. Everything will be a part of cost of production till here. All right. Moving further. Then after cost of production, the third landmark is cost of goods sold. Again, it's in continuation. So it will be, we are continuing from cost of production now. Cost is a continuation sheet. So it is the cost of production for goods sold. So cost of goods sold means whatever has been sold. What is the cost of it? Then what is the difference between cost of production and cost of goods sold? Cost of production is the cost of goods which are produced. Cost of goods sold is the cost of goods which are sold. Clear? Produced and sold. So what will be the difference? Whatever is not sold. Clear? So to the cost of production, we adjust the third stock, which is finished goods stock. Opening we always add and closing we deduct. We will get the cost of goods sold. Clear? So cost of goods sold is cost of production for goods sold. Whatever we are selling, what is the cost of it? After adjusting the stock of finished goods. Then the next landmark is cost of sales. So again, it is in continuation. From cost of goods sold, we add certain expenses, overheads. Now here at this stage, you will be adding all the office and administration general expenses, which are not related to production. Here they will be added, not before. So only the administrative production part will be added earlier, which will be part of cost of production. All these expenses are not part of cost of production. Clear? But they are part of total cost, but not cost of production. So it is the total cost of a product incurred to make the product available to the customer. So it includes administration, general administration, selling overheads. Selling overheads means which are, which you incur to make the goods available for sale. Packing, secondary now. Here you will add the secondary packing. If I am transporting 1000 Tetra packs of juices in a big carton, So that big carton is a secondary packing. That is for selling and distribution. That will be added here. But primary will be added earlier. Okay. Distribution overheads. Distribution means all the logistics and the warehouse charges, go down charges, which are incurred to take the product to the retailers or to the customer. Those are distribution overheads. So you get the cost of sales. Clear? So administrative overhead, general one. So general, anything related to the office area, not production, office area. Clear? So depreciation and maintenance of office building, furniture, accountants, directors, secretaries, rent rates, taxes, lighting, office expenses, indirect material, printing, stationery, legal charges. So all these are the office expenses. You can see the nature of expenses. They all relate to office. Selling overheads which are related with the sale of products. So salaries and wages of sale department, rent, depreciation, maintenance of the sales department, advertisement, online promotion, all these expenses which are related with sale, that will be part of selling overheads. Packing cost, that enables to store, transport, or inform the customer, promote, and otherwise make the product marketable. So the convenience part of it, that is the secondary packing. Distribution, which are related to make the goods available to the customers or reach out to the customers. So transportation cost, insurance, salary and wages of employees engaged in distribution of goods, all right, driver salary and everything. So depreciation, higher charges of distribution vehicles, all right. So the transport vehicles, the trucks or the trains or whatever are transporting the goods. So these are distribution overheads. So this is the cost sheet. So we have understood the different direct cost and indirect cost in detail. Now let us just place it in the cost sheet. Cost sheet is a continuation sheet. There is no break in between. Joint products and byproducts. Joint products and byproducts means if sometimes any production happens, so two products come out of that process. Those are joint products. So if I enter the raw material, so two products will be produced. And byproducts are, if let us say if I have to make sugar cane, so molasses nikalta hai sugar cane se. So molasses is a byproduct. Every time you will make sugar, molasses will be the residue product. That is a byproduct. So byproduct is a secondary product. During the process of manufacture and production, byproduct comes out of the process. So every time if you will process sugar, the molasses will come out. So molasses is a residue product, a secondary product. So that product, that is not a main product, but that is a result of the process of manufacture. So molasses also, if we sell or we further produce, so whatever we gain out of that sale of molasses, a secondary product, that again we deduct. And joint products is when two products come out of the same process of manufacture and both are of equal value. All right. Delivery van charges are distribution. Delivery van, anything relating to transport, logistics is distribution. So delivery van has to be distribution expense. Advertisement, promotion, salesman salary, all these are selling overheads. Clear? All right. So this is the cost sheet. Let's understand. First, we start with direct material consumed. See, first section of the cost sheet till prime cost is all the direct cost. So from here till here is the direct cost. Clear? So direct material consumed. So how you have to calculate? First of all, it's a breakup of direct material. It's raw material consumed. So opening stock, add purchases, less closing stock. Purchases means anything which are incurred to the material also will be part of purchase cost only. That we have done already. Any GST paid, any any insurance cost paid, whatever is paid on the material has to be a part of the material. So any custom duty, any tax, whatever has been paid on the material, which you are not getting a drawback. Input credit nahi mil raha, then you have to add. Clear? Then direct employee cost, then direct expenses. So direct material, direct labor, direct expenses will form part of prime cost. To the prime cost, we add, it's in continuation. To the prime cost, we add the factory overheads. we get the gross works cost. To the gross works cost, we will adjust the second stock. The first stock was the stock of raw material. The second stock is WIP stock. We add opening and we deduct closing. We get the factory cost. Clear? Then comes to the factory cost, we add quality control. We add R&D, only process related. We add administrative, only production related. Any credit for recoveries or scrap or byproducts or any form of miscellaneous income we are getting at the production level, that we will deduct. That's just miscellaneous, very insignificant amount. Then we add the primary packing. Clear? So we get the second landmark, the third important landmark, which is the cost of production. All right. The first was prime cost, then was factory cost, then cost of production. Again, to the cost of production, it's in continuation. We add the third stock. We adjust the third stock, finished goods. At this stage, we adjust the finished goods stock. Opening, we add, and closing, we deduct. We get the another landmark, the head of cost, which is the cost of goods sold. To the cost of goods sold, we will be adding these. Now, these overheads are part of total cost, but not cost of production. Anything before cost of production will all be part of cost of production. But the overheads later are part of total cost, but not cost of production. So general administration, marketing overheads, selling and distribution both, and any interest also if you pay, that again is part of it. So you will get the cost of sales. Cost of sales is also called the total cost. So cost of sale includes everything. Direct cost, indirect cost, production cost, other cost. So everything is added. We get the cost of sales. This format you don't have to change. You have to follow the sequence of the format. You cannot add, selling before factory. You cannot you cannot do cost of goods sold before cost of production. So everything has to be in sequence, and the sequence has a logic. All right. So you get first cost of production and then the rest of the overheads follow. All right. So there are certain treatments in the cost sheet. Abnormal cost, again, abnormal cost, as always we have maintained, we never treat it as a part of cost of production. Clear? So everything, any abnormal cost generally goes to costing profit or loss account. They will not form part of cost of production. Any subsidies and grants, of course, we will reduce it. It will be reduced from the cost objects. So anything we receive the subsidy or grant from the government, that we reduce. Penalty fines. So anything in the form of penalty, fines, damages will not be form part of cost of production. Interest and other finance costs. So whatever interest you are paying on the loan, whatever debt you have taken, so that will not form part of cost of production, but that will be added last, just before cost of sales. So interest and finance charges will be added just before cost of sales, at the point of cost of sales. Clear? So you can just add them over here. Any interest or finance charges will be added at the last. Clear? After distribution overheads, at the point of cost of sales, you can add it over there. So any related to, whatever in the nature of interest, anything you have paid, that will be added later. So interest and finance charges shall be presented in the cost statement as a separate item of cost of sales. So it will be added later. Yeah. Advantages of cost sheet, of course, it gives you the total cost and cost per unit. Every time you make the cost sheet, you have to make two columns for the figures. One for the total cost and another for cost per unit. Clear? So total cost and cost per unit. So it helps in cost comparison and cost estimates. It provides sufficient help in arriving the figure of selling price. It's very, very useful for selling price because cost sheet will give you the total cost, which is cost of sales. So you add the profit margin and you get the selling price. So cost sheet actually helps you a lot to fixation of the selling price. And it facilitates cost control also because you have everything in at one go. You can have a glance what are all other cost components, and you can compare also from the previous year figures. So that is the advantages of cost sheet. All right, so here we will be starting with the illustration since we have, understood all the concepts and the nature of all the classification. So take a note of this illustration, please. So this is the data relating to manufacture of a standard product during the month of April. Raw material, then direct wages, machine hours worked, and R per hour rate. So overheads are generally absorbed, clear? Especially the production or the factory or works or manufacturing. All the names are similar. They are generally absorbed, clear? So administration overheads are given which are general. Selling overheads are given per unit. Units produced, units sold, and selling price per unit. So just make columns total and per unit, clear? So you should make total and then per unit. Per unit, I think you can calculate. On top of it, you should write units produced. So units produced are 4,000. Units produced are 4,000 units. On top of the cost sheet, you should always write unit produced. Clear? So we have to prepare a cost sheet for showing cost per unit and profit. All right. We'll always start with raw material. So raw material is 1,80,000. Make the cost sheet, all of you. You have to follow the format. The cost sheet will start with prime cost. So raw material 1,80,000. Direct wages, that means direct labor or direct employee cost 90,000. So it will be 90. Machine hours worked and machine hour rate. That means it's manufacturing overhead, machine hours. So it has to be part of production overhead or factory overhead. So then there will be factory overhead. So factory direct expenses are not there. So it will be prime cost first. First calculate prime cost. Direct expenses are not there. So how much is prime cost? Let me just clear it. Calculate the prime cost. There are no direct expenses in this question. So you can directly calculate the prime cost. So how much is prime cost? The first landmark, direct material and direct wages. Come on, can I have the answers for the prime cost? The first head of cost, the first and the only head of direct cost, which is prime cost. All right. 2,70,000 is the prime cost. Answers should kept coming. Do along with me. To the prime cost, we add factory overheads. Clear? To the prime cost, we add factory overheads. Let me write it over there properly. You just calculate per unit side by side, okay? Okay, so this is raw material, 1,80,000. Then you have direct labor, 90,000. So then we have the prime cost, which is 2,70,000. Calculate per unit also. On top of it, units are 4,000. Units produced 4,000. So how you will calculate cost per unit? Raw material per unit. Calculate per unit also. 1,80,000 divided by 4,000. 90,000 divided by 4,000. So every element of cost you will divide by units produced. All right. Then prime cost. To the prime cost, we add factory overheads. So machine hours worked and machine hour rate. This is the absorption rate for factory overheads. So 10,000 into 8, 80,000 is factory overhead. 80,000 is factory overhead. What you get? Gross works cost. How much is gross works cost? Can I have the answer? Gross works cost, come on. Yes, keep on calculating CPU also, cost per unit. Keep on calculating cost per unit. So you have to calculate cost per unit for raw material, then direct labor, then prime cost also. How much is prime cost per unit? 270 divided by 4,000. So for every step, you have to calculate cost per unit. So you get the gross works cost. How much it will be? 3,50,000. Keep on calculating cost per unit also. How much is gross works cost per unit? 3,50,000 divided by 4,000. All right. So every cost divided by 4,000, you will get the per unit also. So gross works cost. See, we don't have the WIP stock. So gross works cost and works cost or factory cost is the same. Clear? We don't have all the four overheads also: quality, R&D, production, administration, packing. We don't have. So that means gross works cost is also the factory cost or works cost, and it is also the your cost of production. It is also your cost of production. Again, finished goods stock is not there, so it is also cost of goods sold. It is also cost of goods sold. Okay, okay. Closing stock is there. 1 minute. Closing stock is there. So cost of production. So this will be cost of production. Then you will add opening stock is not there, but closing stock is there. So opening stock is not there, but closing stock is there. Less closing stock of finished goods. How much closing stock is there? 400 units. See, you have produced 4,000, but you have sold 3,600. So the closing stock units are there, which are 400 units. That means out of 4,000, only 3,600 have been sold. So 400 is left. Now, opening stock is not there. Closing stock of finished goods, we need to value. Clear? How much is the cost of production per unit? Give me the cost of production per unit. 3,50,000 divided by 4,000. How much is the cost of production per unit? Can anybody tell me cost of production per unit? 87.5. All right. 87.5 is cost of production per unit. 87.5 is cost of production per unit. You just multiply 400 into 87.5. You will get the closing stock of finished goods. So closing stock of finished goods is cost of production per unit. You just multiply with that. Clear? So it's 400 into 87.5. Can you tell me the value of closing stock? Yes, 87.5. So valuation of closing stock, 87.5. Student, it's a highlight here. You have to value the closing stock of finished goods. It's not given. It generally will not be given. You have to calculate. So how you will calculate the value of closing stock of finished goods? The cost per unit of cost of production will be applied to the units. Clear? So cost of production per unit is 87.5. How you calculate it? 3,50,000 divided by 4,000 units. So you will get 87.5. Just multiply with 400 units of closing stock and you will get 35,000. Then you will get COGS, cost of goods sold. So 3,50,000 minus 35,000. 3,50,000 minus 35,000. 3,15,000 is cost of goods sold. I hope you're able to understand. 3,15,000 is cost of goods sold. Now we will be adding two more overheads. Add. It's in continuation. Add admin overheads general. It will be 35,000. Admin overheads general 35,000. Now you have to be careful on one thing. Cost of goods sold. Now cost of goods sold per unit. Can you give me cost of goods sold per unit? It should be on the basis of units sold now. Clear? I'll explain you later again. Add admin overheads 35,000. Add selling overheads also. Selling overheads per unit. Can you tell me selling overheads? The amount of selling overheads. Come on. It's 5 per unit. Please give me the amount of selling overheads. Yes, COGS is 3,50,000 is COGS. All right. Can you tell me the selling overheads? I need the amount of selling overheads. Any more answers for selling overheads? It's 5 per unit. Can you tell me the amount of selling overheads? Come on. The amount of selling overheads. Yes, always remember, selling overheads will always be out of 3,600 units, not units produced. Selling overheads per unit into units sold and not units produced. So if selling overheads are given per unit, Students, you have to multiply by units sold, not produced. Clear? So these are the mistakes which students make. So 5 into 3,600, not 5 into 4,000. Selling overheads will be 5 into 3,600. That comes to 18,000. Clear? So cost of sales, there is no other overhead. So cost of sales, quickly calculate the cost of sales. It's in continuation. So cost of goods sold 3,15,000 plus admin 35,000 plus selling 18,000. So it's 3,68,000 cost of sales. 3,68,000 is cost of sales, which is also called as total cost. Just prepare the way I am teaching. Just prepare the same way. All right. So you have to practice a lot of questions and, mark and highlight the important highlights of any question. See, every question you cannot solve before the exam. So while solving the question during a preparation, just note down the highlighted points of every question. This is how you can cut down on your revision time and you can focus on all the important points. Clear? So this is the cost of sales. Selling price 125. So sales you have 125 into 3,600. Clear? So how much is the sales? Can I get the sales? Cost of sales. After cost of sales, you add profit and you will get the sales. So sales is how much? 3,600 into 125. 4,50,000 is your sales. Minus 368,000. So profit is 82,000. Calculate the profit per unit also. Profit 82,000 is the profit. Yes, profit is 82,000. Sales is 4,50,000. So this is how we have done. Okay. So this is the, the fair solution. On top of it, you must write 4,000 units. So students, one thing which I wanted to explain you, till cost of production, what I'm explaining you, just pay attention. Till cost of production, you will divide every cost with 4,000 units. Till cost of production, you have to divide by cost of production units. That means 4,000 units. From cost of goods sold, this is the sales territory. You will divide by 3,600 units to get the per unit costing. I repeat, till cost of production, the units will be 4,000 units. That means if you want to calculate raw material per unit, you will divide 180 by 4,000. Direct wages 90,000 divided by 4,000. Prime cost 2,70,000 divided by 4,000 to calculate cost per unit. But from cost of goods sold, the denominator will be units sold, not produced. Clear? So 3,15,000 divided by 3,600. Calculate 3,15,000 divided by 3,600. You will get 87.5. 35,000 divided by 3,600. 18,000 divided by 3,600. And cost of sales divided by 3,600. So from cost of goods sold, the units will be, the denominator will be units sold. All right. So this is an important thing you should note. Students make mistakes in exams. They divide everything by 4,000 units. So from cost of goods sold, this is the sales territory now. This is sales territory and this is production territory. Clear? So these things you should understand. Administration to general expense. General administration is not related to production. It's written general. General means it's not production related. If it's production related, it will be mentioned. You will come to know that it's production related. This is general administration. That means general office expense. Had it been production, then we would have added it at, at the point of cost of production. Before cost of production, we would be adding. But if it's a general, then we will be adding after cost of goods sold. Clear? So students, I hope you have understood. Why finished cost CPU not calculated? See, the CPU is not required because it's a deduction. So CPU को भी deduct कर दोगे तो zero हो जाएगा. You getting my point? CPU, यहाँ पे closing stock of finished goods is a deduction. So if you will write the CPU, that again you have to deduct. So it will become 0. All right. So we don't write the closing stock of finished goods here. Automatically the net effect comes here. Because here the units are 3600. So you will directly have the net effect rather than writing it over there. Okay. So this is how it is done. I hope no more queries. Cost of finished goods. Yes, 400 into 87.5. That exactly we have, I've explained you. Cost of production per unit will be multiplied to calculate closing stock of finished goods. Clear? Profit will be divided by units produced or sold. You just calculate on your own. Try on your own and find out. Profit, I told you, after COGS, everything will be divided by units sold. Students, profit you have earned out of unit produced or unit sold. It's very logical. You only tell me, how should I divide unit sold or unit produced? Is profit you are deriving out of unit produced or unit sold? So profit again has to be divided by units sold only. I told you very clearly, after cost of goods sold, everything is a territory of sales. You have to divide everything out of units sold. As simple as that. All right. So I hope you have understood this illustration. Yes. Opening or finished goods. Opening stock is not given. And opening stock will always be given to you in the question, because opening stock we always value one. You should always remember one thing. We always value closing stock. We never value opening stock. Opening stock is actually carry forward amount. We never value opening stock. Opening stock is the carry forward amount of last year's closing stock. So we always value closing stock. And closing stock automatically becomes the opening stock. Clear? So had it been opening stock, it will be given to you in the question. So let's move on. Okay, so we have the other illustration. Just take the note of this illustration. We have all the 3 stocks in this question. Just take a note of this illustration. Yes, it will be units sold for profit also. Take this note of this illustration. Make a format. Again, make a format. Okay, in this question, units are not given. So you can get away with the cost per unit column. You can only make one column because units are not given in this question. So you can make only a total column. Clear? Be ready with the format. Shall we start? All right. So now again, we'll be starting with the raw material, the direct cost. So I can write it over here. Cost of raw material purchase. So that means here you have to calculate raw material consumed. Raw material consumed. Opening stock of raw material, it's already given. It's 60,000 plus purchases. Purchases is given 480. 4,80,000 purchases. Then there is no other expense. So minus closing stock of raw material is 50,000. So you will get raw material consumed. Write it in the outer column. So raw material consumed. Can you give me RMC? Raw material consumed. Can I have RMC amount, please? 60,000 plus 480 minus 50,000. Can I have the value of raw material consumed? Quick calculation, students. Come on, let's have quick calculation. I'm waiting for RMC amount. Or shall I calculate? 60,000 plus 4,80,000. Okay, I got it now. 490. I hope it's correct. So I'm taking this value. 490 is raw material consumed. To this, you add direct labor. You have direct labor? Yes. So we have direct labor. And students also see a cost sheet normally has elaborate question. It's a very big question. Clear? So normally what you can do when you have taken any item, like we have taken the opening and closing stock of raw material, we have taken the purchases, now we have taken the wages also, 2,40,000. So whatever you are already taken into the cost sheet, just just mark with pencil in the that you have taken these items. Otherwise you will get confused whether you have taken this or not. So just highlight it, put a dot or something that you will be sure that, okay, this item has been taken, because everything will come at one place. Clear? So that's going to ease out for convenience, like that, okay, these things you have taken. So direct labor we have done, no direct expenses. So now the first landmark, the first head of cost, we will be getting the prime cost. Can I have the prime cost quickly? 2,40,000 is what? Direct labor is 240. Can I have the prime cost? Minus 50,490 plus 2,40,000. So 7,30,000 is the prime cost. To the prime cost, we will add factory overheads. To the prime cost, we will add factory overheads. To the prime cost, we add factory overheads, which is 1 lakh. To the prime cost, we will add factory overheads, which is 1 lakh. So this is done. Yeah? Yes. Factory overheads. Then you get the gross works cost. Gross works cost is 8,30,000. Gross works cost is 8,30,000. Just do it along with me. Gross works cost 8,30,000. Now the time to adjust the second stock, which is WIP. After gross works cost, we will adjust the second stock plus opening WIP minus closing WIP. Opening WIP 12,000 and minus WIP 15,000. All right. Yes. Adjust the WIP stock, you will get the factory cost. Factory cost or works cost or manufacturing cost or production cost. Any word you can use. Factory cost 8,30,000 plus 12,000 minus 15,000. So 8,27,000 you have the factory cost. 8,27,000 you get the factory cost. Here. Now, administration related to production. Here you are giving the administration, not general. So these administration overheads are not general. They are production related. So production, that means you will add it over here. They will be part of cost of production. So add administrative expenses because they are production related. 50,000. So administration, 50,000 you add it over here. It will be 8,77,000, which will be cost of production. See here, administration expenses are part of cost of production because they are production related. Yeah. So 8,77,000 will be cost of production. 847. Cost of production is 847 or 877. Please check. Cost of production should be 8,77,000 as per my calculation. Please check again. After cost of production, we will adjust the third stock, which is finished goods stock. Add opening stock of finished goods, less closing stock of finished goods. Opening is 90,000. Closing is 1,10,000. Closing is 1,10,000. So add opening stock of finished goods, less closing stock of finished goods. So you will get, what you will get? Tell me, what is the next head of cost? Yes, 877. What is the next head of cost? What will I get after adjusting finished goods stock? To COP, I have adjusted finished goods stock. Now what will I get? What is the next landmark? First is prime cost. Second is factory cost. Third is cost of production. So what is the fourth landmark? Fourth head of cost, major head of cost. What will I get? Come on. Cost of goods sold. Yes, it's cost of goods sold. How much is cost of goods sold? 857. I'm taking your figures. I hope the calculation is correct. I'm getting 8,57,000 is cost of goods sold. To the cost of goods sold, we'll be adding the last overhead, selling and distribution. Add selling and distribution overhead, which is 25,000. Selling and distribution, you get the cost of sales. 8,82,000 should be the cost of sales. Yes. 8,82,000 should be the cost of sales. We have the sales given in the question 10 lakh. So to the cost of sales, add profit. Profit will be the balancing figure. Profit will be the balancing figure. Please tell me the profit. Profit will be the balancing figure. So this is the entire cost sheet we have made. Factory cost, add admin, then you get the cost of production. Then we adjust the finished goods stock. We get cost of goods sold. Then we add selling and distribution overheads. We get cost of sales. Yes. Yes, profit you have to show. How much is profit? 1,18,000. 1,18,000 is the profit, which is the balancing figure. 1,18,000 profit is the balancing figure. All right, so we have the clear solution also. So the first head of cost, 7,30,000. Just check, cross-check your answers. Yes, you have to show cost sheet also. Then the second landmark, the head of cost is factory cost, then cost of production, then cost of goods sold, and then the sales. So this is how it is done. Any doubt so far? Yes. Profit is 1,18,000. All right. So shall we move on? All right, let's move on. Okay, so this is one illustration. So students, it's a very, very elaborate illustration. Clear? And it will explain you and make you understand the classification of cost, basically, that how the functional classification, what will go where. Clear? So you have to be very, very clear. Say in cost sheet, you have to be very clear about the classification. You cannot add direct cost to indirect. You cannot add selling to factory. You cannot add factory to administration. You have to be very clear and thorough regarding the classification of cost. All right. So this illustration will be a very good practice for you to understand which expense will go where. All right. So this is going to give you some clarity on the same. So let's start. Have this note of this illustration. Very good. I'm glad that you have understood, students. So let's have a better illustration so that you will understand it in a better way. So the cost sheet, we start with raw material, all right? So direct material, direct labor, direct expense, we have to reach up to prime cost first. Clear? So let's break it and solve it so that you understand better. So be ready with your cost sheet format. Again, I don't see any units here. I don't see any units here. So I think one total column will be enough. Okay, so no units are there. So I think one total column is enough. Now students, in such type of questions, what I would advise is you make a proper cost sheet column, proper cost sheet format. Then it will be easy because you cannot look for one item in the entire cost sheet. So first we will make a complete format of the cost sheet. How you would do it for such type of questions? Just make, let us say, raw material consumed, leave 4-5 lines, then direct labor, leave 4-5 lines, then direct expenses. So make a structure of the cost sheet first, all of you. Then only we'll start these questions. All right. Very difficult. No, it's not difficult. It's very, very easy. You'll do along with me and you will be able to understand. Nothing is difficult. It's all, if your concepts are clear, your fundamentals are clear, at least you will be able to understand. All right. Previous AIA papers questions also. See, it's very difficult to solve all the study material questions, all the previous year questions in one session. All right. So we try to include the questions like this. This question is also given in your RTP, revisional test paper. Similar question in your revisional test papers for May 24 exams. A similar question is given. Clear? But this is a more elaborate question than in your RTP. So this is a very important question. It becomes a very important question because a similar question is there in your RTP also for May 24 exams. So that is why we'll be, doing this question very thoroughly so that you are able to understand. And some of the questions, a couple of questions I have included here also, which has come in your past years. So Rohit, one or two questions we will be covering in this session, which have come in your previous year papers. But apart from that, it's very difficult to cover. See, we cannot solve all the question of previous years also, study material also, RTP also in one session, where I have to explain you also and then solve it also. Clear? So you need to practice on your own, but we are here just to clear the concepts. We cannot solve each and every question for you. I hope you understand. So just be ready with the entire cost sheet format. Leaves lines, all right, as I was explaining you. So direct material, leave certain 5-6 lines, then direct labor, leave 5-6 lines, then direct expenses, leave 5-6 lines, then prime cost, all right. And then you, add factory overheads. Again, factory overheads, leave 6-7 lines. So make a complete format. Only then you will be able to understand. So raw material purchased. Okay, I will be writing over here only. You just place the figures in the format which you are making. So you do the format. I will be just guiding you the classification because I cannot do everything here. Clear? So raw material purchased will be part of the raw material. So raw material purchase will be part of raw material. Then GST paid on the above purchases 18%, eligible for input tax credit. That means GST is available for input tax credit. You will not add this GST. This GST will not be added because you are getting input tax credit on this. That means you will get it back. So whenever you are paying GST and you get input tax credit, that means you get the GST back. We don't add it. So this we will not be adding. Yeah. Freight inwards. So what about freight inwards? Where should we add freight inwards? Come on. Any idea freight inwards? I told you anything paid on purchases of raw material will be a part of the raw material cost. So this also will be added to the raw material cost of purchase. Anything which is paid for raw material or to bringing the raw material to the company or to the factory gate will be added. So freight inwards will also be added to raw material. Clear? So to a raw material, wages paid to direct factory workers. Factory workers, it will be direct labor. Wages paid to factory workers is direct labor. Wages paid to factory laborers. I'll see RTP. See, we are already discussing RTP. I'm taking the questions from RTP also. Don't worry. This question which we are doing is similar. We have a similar question in RTP. All right. This is more elaborate than RTP question. So we are taking the RTP questions also. All right. Topic by topic. We cannot discuss RTP in one go. But whatever question of, let us say, The batch costing I did in the last class. So one question of batch costing we discussed, of which was given for in RTP May 24. So topic wise RTP questions we are taking care in the sessions only. And this question which we are doing, a very similar question is there in the RTP for cost sheet. Clear? So we know, and we are taking the RTP questions also topic wise. In every session related to that question we are taking. Okay, so raw material to include carriage. Yes, raw material to include carriage inward. So any expenses of raw material, opening and closing stock of raw material to be taken, of course. But when let it come in the question. I'm going question wise. I'm going one at a time. Clear? You just add it on your own if you want to. But I will go as per the question. That's why I'm writing it against it where it will go. Contribution made towards employees provident fund and ESI. So it will also be part of direct labor. So anything paid to the factory workers, the wages, the contribution towards employees PF, it's also a labor cost. Production bonus paid to factory workers, again direct labor. So it will be all part of direct labor. Anything paid to factory workers, that means they are working directly on the product. Wages paid to factory workers, contribution made towards employees, production, all three are direct labor. Royalty paid for production, direct expenses. Royalty paid for production, direct expenses. Royalty paid for production, direct expenses. First, you need to place it in the cost sheet. Later, we will be calculating the heads of cost. That's exactly what I was telling you. Clear? It's better you make an entire format of cost sheet first, because the items here will be, one will go there, one will go here. So it's better that you simultaneously place under different heads. Amount paid for power and fuel, direct expense. Amount paid for purchase of molds and patterns, direct expense. Amount paid for molds and patterns, also direct expense. Life is equivalent to 2 years production. That means the amount you have paid, 8,96,000, is for 2 years production. So for 1 year, you have to take only 1 year charge. So you will be taking 4,48,000. 448,000 you will be taking. Divide by 2. Clear? I repeat. The amount paid for purchase of molds and patterns is equivalent to 2 years production. That means you have paid for 2 years. But we have to charge it for only 1 year first. We cannot charge 2 years production charges in 1 year. So just divide by 2. Job charges paid to job workers. Job charges paid to job workers. Come on. Clear so far, molds and patterns? Job charges paid to job workers, direct expenses. So till here, the direct expenses are there. Job workers, direct expense. Yes, job charges paid to job workers. Anything which you are charging paid to job workers should go to direct expenses. They are special kind of, jobs to be done for the product only. So the job workers, that's a direct expenses. Stores and spare consumed, these are factory overheads. Stores and spares consumed, it's factory overheads, not direct expense, factory overheads. Depreciation, will come to depreciation, factory building, factory overheads. Office building, see, office building depreciation, that's why I told you to make an entire format first, so that we place. So depreciation on office building will directly go to general administration. General administration expense after cost of goods sold. Plant and machinery, factory overheads. Plant and machinery, factory overheads. Anything related to factory area will go to factory overheads. Delivery vehicles. Delivery vehicles, come on, it's distribution expense. Delivery vehicles is distribution expense. So we repeat, raw material will go to raw material. GST, you are getting input tax credit, so nothing will be added. Freight inwards, raw material. Anything paid on purchase of raw material will be added to raw material cost only. Wages paid to factory labor workers, direct labor. Contribution, direct labor. Production bonus, direct labor. Royalty is always direct expense. Power and fuel, direct expense. Molds and patterns, direct expense, but half of it because you're paid for 2 years. Job charges, always direct expense. Stores and spares, factory overheads. Depreciation of factory building, factory overheads. Office, general administration expense. Plant and machinery, factory. Delivery vehicle for distribution, logistics, transportation, they are a distribution cost. Clear? Job workers are job workers are the workers who are specially hired for a particular job or a product. Clear? So that's why we are taking into direct expense. They are generally, hired on a daily basis. A special kind of they are hired for a special kind of job or on the product. So that is why they are called direct expenses. Students, here we'll take a short break of 5 to 7 minutes. By the time you just place it in the cost sheet, and we'll come back after a break. All right. Thank you. Welcome back, students. So I hope you are on the question. Okay. So we have done so far. Any doubt here? Shall we proceed? Okay. So this is the next part of the same question. Salary paid to supervisor. Supervisor means the main factory. They are in the factory area. So this will be. Supervisors will always be factory overhead. See, supervisors, they are always part of the main area, shop floor. So they will go to factory overheads. Repair and maintenance paid. Now, repair and maintenance expenses for plant and machinery. For plant and machinery, factory overhead. Clear? Sales office building. Sales office will go to selling overhead. Selling, not distribution, selling. You have to make separate for selling, separate for distribution. So sales office will be selling overhead. Sales office will be selling overhead. Vehicles used by directors. It's for directors, not for promotion or not for product. Vehicles used by director will not go to distribution. It will be selling only. Selling overhead. Vehicles used by directors. Distribution only will be when the vehicles are, the delivery vans will be distribution. Clear? So vehicles used by directors should be selling. Now comes insurance premium. Plant and machinery will go to factory. Factory building will go to factory. So it's factory overhead. Factory building will be factory. Insurance for stock of raw materials and WIP. Insurance you are paying for raw material and WIP. It's also going to factory. Factory overhead. So insurance premium paid for stock of raw material will go to factory overhead. Expenses paid for quality control. It will go to quality control expense. Quality control after works cost. After works cost, we add 4 categories of overheads. Quality control, R&D, administration related to production. And then the 4th one, research and development related to process. Clear? So we add 4. I repeat, quality control. Then we add the administration related to production. Then we add research and development. All right. So these are quality control. So quality control will go to quality. We have a separate head for quality control cost after works cost. Salary paid to quality control staff. Again, it will go to quality. Okay. So quality control. Research and development for improvement in production process. Yes, it will go to R&D production or R&D process. So it will be a part of cost of production. R&D paid for improvement in production process will be a part of cost of production. So after quality, so there are 4 heads: quality, R&D, administration related to production, and primary packing. There are four heads after works cost. So there are 4 categories of overheads. So R&D, it will go to R&D. Expenses paid for pollution control and engineering and maintenance. Pollution control and engineering and maintenance happens in the factory area, factory overhead. It should be part of factory overhead. Expenses paid for pollution control, engineering, maintenance. See, office ho nahi sakta, selling nahi hai. It will be a part of factory overhead. Expenses paid for administration of factory work. This is administration expenses related to production. Clear? This is administration of factory work. This is the category where we will be including administration expenses related to production. Not general. They are not general administration. Office wala administration nahi hai. Administration of factory work. Clear? I hope so far so good. Yes, supervisor will be factory overhead. Now, salary paid to functional managers. Let us see. Salary paid to production control. Salary paid to production control manager will come under administration production. Administration production. Will come under administration, production. Salary paid to finance accounts. You tell me, finance accounts, where will it go? You tell me. Finance accounts, where it will go? Finance accounts, yes, can I have the answer? Salary paid to functional manager of finance and accounts, where it should go? Production control will go to administration expenses related to production. That means it will be a part of cost of production. Finance and accounts, where it should go? Which administration? We have two categories of administration related to production and general administration, which is added later after cost of production. Yes, it is part of general administration, which will be added later. It will not be part of cost of production. It will be added along with selling overheads. Clear? So finance and accounts are basically general administration. General administration. See, production control manager is administration production. But finance account is administration general. It will not be part of cost of production. Sales and marketing, selling overhead. Sales and marketing, selling overhead. Sales and marketing will be selling overhead. Yes, general administration. Santosh, good. What is good? Santosh, what you are finding good? Yes. Salary paid to general manager. Salary paid to general manager. Where should it come? Come on, the answer should come from your side. Salary paid to general manager. Where should it come? I need quick answers. Salary paid to general manager. Answer should come from your side. Come on, I'm waiting for the answer. Yes, general administration. General administration. Packing cost paid for primary packing. Packing cost paid for primary packing will be a part of cost of production. It is the fourth category under the after factory cost. So primary packing will be part of cost of production. So it will be added packing primary. Clear? So it's primary packing that will be added just after R&D and quality control and production administration. It will be a part of that category. For redistribution of finished goods, come on, where it will come? Packing cost for redistribution of finished goods, where it will come? Who will tell? Santosh, pay attention and focus on the question, please. Packing cost for redistribution of finished goods, where it will come? Can anybody tell me? For redistribution of finished goods, I want the answer. Students, I need quick answers. Selling overhead. Secondary packing. Selling overhead. No, it's not selling. It's not selling. It's distribution. Selling and distribution are two separate categories. Selling are to make the anything incurred on the sale. Distribution is to make the goods available to the customer or to the retailer. So redistribution of finished goods, that will be a distribution overhead. You have to be clear what is selling and what is distribution. It is distribution overhead, secondary packing. This is called as secondary packing. So the primary packing will be at the level of after the works cost, and secondary packing will be at the distribution level, distribution overhead. All right. So I hope this page is clear to you. Packing overhead. Packing overhead is, it's a distribution overhead, not the selling overhead. Clear? So supervisor, factory overhead, repair and maintenance, plant, factory, sales, selling, vehicle used by directors, selling, insurance premium for plant and machinery, factory, factory building, factory, stock of material, factory, expenses paid for quality control and salaries that will go to quality. R&D will go to R&D because it's process production related. Expenses for pollution control, factory. Expenses for administration of factory work is administration, production. Salary paid to production control manager, again administration, production. To finance and accounts, general administration. Sales and marketing, selling overhead. Salary paid to general manager, general administration. Packing cost, primary, will be part of cost of production. And redistribution will be secondary, that will go to distribution. I hope so far so clear. Let us move. All right. Interest and finance charges paid for use of non-equity fund. Non-equity means normal debt. Normal debt is non-equity only. So this will be this will come as the last item just before cost of sales. So it will be added at cost of sales stage. Clear? Just after distribution. So what you add there at the last 4 categories after cost of production, what you add? You add general administration, you add selling, you add distribution, you add secondary packing. Clear? So 4 categories you add to reach up to cost to sales. But just after these 4, the 5th one will be the interest and finance charges. So just before cost of sales. Clear? So after cost of production, cost of goods sold. So you get the cost of goods sold. So then you add general administration. Then you add selling, then you add distribution, then you add secondary packing. Clear? So then you add secondary packing, which is again part of distribution. After this, you add interest and finance. Last item. Then you get cost of sales. Clear? So it will be the last one at the point of cost of sales. Fee paid to auditors. Fee paid to auditors, general administration. Fee paid to legal advisors, general administration. Fee paid to independent directors, general administration. So all these 3 are general administration. Performance bonus paid to sales staff. Where it will go? Yes, finance charge. Performance bonus paid to sales staff. Where it will go? Performance bonus paid to sales staff. Where should it go? Come on. Performance bonus paid to sales staff. Can I have the answer, please? Performance bonus paid to sales staff. Selling overhead. Very good. It is a selling overhead. Anything you are paying to sales staff, sales department will go to selling overhead. Clear? Then we have the stock. So stock is given at the end. Raw material stock will be added, opening stock will be added to calculate raw material consumed. Clear? So the first part will be clear now. WIP will be adjusted after gross works cost. Clear? Finished goods will be added. Opening stock will be added after COP. Value of closing stock again. So all the stocks are there. So opening stock and closing stock, you have all the 3 stocks: raw material, WIP, and finished goods. So you have 3 stocks. All right. Amount realized by selling of scrap and waste generated. Now this is the recovery which you get out of production process. So out of production, you have some scrap and you have sold this scrap. So it's a gain to you. It's a gain to you. It will be deducted before calculating the cost of production. Clear? So there what we add after this works cost, what you add? You add administration related to production, you add quality control, you add R&D. Okay, you add the primary packing. Before primary packing, you should deduct scrap. So deduction, it will be before you calculate cost of production. Clear? So it will be a deduction. You will reduce 86,000 from the, before you calculate cost of production. So there it will be deducted. Clear? So I hope you are, yes, deduct before COP. So before, at that stage where you are adding quality, R&D and administration for production, after that you deduct scrap, and then you will be adding primary packing, and then you will be calculating cost of production. Clear? So it will be deducted before calculating COP. So I hope students have got the classification correct. No more doubt in classification. Now let us see. I hope you are in the process of making the cost sheet also on your own. So first of all, we'll be reaching up to prime cost. We had the raw material purchase, freight inwards. We have to add it to raw material. Always remember. Clear? So because it is a part of cost of purchase of raw material. It is a part of cost of purchase of raw material. So adjust the opening stock and the closing stock of raw material. Opening we add, closing we deduct. This is raw material consumed. Clear? Then we had the direct labor cost. We had three things under direct labor cost: wages, contribution, and production to factory workers. So this is direct labor. Then the direct expenses, we have four direct expenses. Royalty, always remember, royalty will always be direct expense. Power and fuel, molds and patterns. See, molds and patterns, we have taken the 1 year charge. We have paid 8,96,000. But 8,96,000 was for 2 years. So we will be taking 1 year charge because it had life of 2 years. Job charges paid to job workers, we always take in direct expense. So this is the prime cost. We have reached up to the first head of cost, which is the prime cost, which is the only head of direct cost. Clear? Yes, Sumansi, it's always stick to the fundamentals and concept. And this will be very, very easy. It's a very basic question of cost sheet, but a very good idea you will get the how we do the classification of cost. On face of it, you will say it's such a 3 pages question. So it's very difficult. Sometimes, a big question is very easy to understand. And sometimes a 4-line question is more difficult, right? So it's CA, it's very unpredictable. So you have to be prepared, all right? Okay, so this is prime cost. Now let's move on to the prime cost. We add the factory overhead. So in such type of question, it's always better make a complete format of cost sheet and then follow the sequence of the question. It will be very easy for you. So you just place the figure wherever it goes and then at the last do the calculation. First, just place the figures of the question into the format wherever it belongs to. Clear? Stores, spares consumed, depreciation of factory building, depreciation plant and machinery, repairs and maintenance of plant and machinery, insurance plant, factory, raw material, salary paid to supervisor will be not administration, will be part of factory overhead always. Pollution control factory, then you adjust the work in progress stock and you get the factory cost, the first head of cost for indirect cost. Clear? So this is how we do. Let's now move on. We have already done the classification. So to the factory cost, we will add the 4 more categories of quality control. So there are 2 quality control. There is 1 R&D. There are 2 expenses of administration related to production. I hope we have just checked the classification. I hope we have done the right classification. Anything which we have considered as, any other overhead and here it's something else, you just let us know. I think by till now, though, we have done the correct classification. Here at this stage, you have to deduct the 86,000 scrap value, which we have realized at this level before primary packing. Clear? So you should understand it should be deducted before primary packing. These things are very, very important. So then you add primary packing after deducting. So this is the next landmark, the head of cost, which is cost of production. After cost of production, we adjust the third stock, which is finished goods. Opening we add and closing we deduct. We get the cost of goods sold. So what's the difference between cost of production and cost of goods sold? Cost of production is the cost of goods produced. Cost of goods sold is the cost of production of goods sold. What is the production cost of the goods which are sold? Clear? That is the meaning of cost of goods sold. After cost of goods sold, we have the categories. Administration overhead. So there are basically 3 administration overhead. General administration. These are general, not production related. These are general. So these are not part of cost of production. Clear? That you have to take an idea from the question, or otherwise you can do it as per your convenience. This was the way actually I used to do. But yes, it's actually as per your convenience, whatever you think it's convenient for you. Otherwise, you have to see if you want to look for raw material consumption. For everything, you have to look for the entire question. You have to look for anything related to raw material. Then for direct labor, again, you will go to the whole exercise. So that is very, very time consuming. That is why I said, all right. But again, it's up to you how you choose to do it. Then salary paid to general manager. Okay, so one thing more comes under. So everything is part of administration, general administration. So these all are costs related to general administration. Next, we'll be adding selling overheads, sales office, sales marketing, sales staff. See, everything related to sales will come under selling. Distribution, delivery vehicles will be part of distribution. Then packing cost for redistribution, that is the secondary packing. So it is part of secondary packing. It's a separate head. So we have one general administration, then selling, then distribution, then secondary packing, and last, just before cost of sales, you have to add interest and finance charge. Clear? Just at the last item. So this is the interest and finance charge, and you reach up to cost of sales, which is also called the total cost. All right. So it appears to be very difficult question, but it's a very interesting question. And this way we have, see, if you had done this question, a very similar question is there in RTP for May 24 exam, but half of this question. So you have done a more elaborate question. Out of this only, they have included a question in RTP. So if you have done this question, that means you have already done RTP question for cost sheet. All right. So we have we are including RTP questions also. If we have a better question in study material, then of course we do the better one wherever it is. All right. So this is the cost of sales we have done. I hope there should not be any doubt. Any doubt you can ask. Let me just show you the final look of this question. Just have a final look about the presentation. All right, so let's move on. This was the question we did. Okay. So this another question, take a note of this. Somebody was saying to do, the previous year question papers. Student, this question has come many times in your intermediate. So this is a question from your previous year question papers. A very good question, a very basic question. This will clear the concepts further, and you can do this question only when you're thorough in the cost sheet. So it's a very small question, but it has a lot of concepts that you will understand and you will learn how to do it. Clear? So basically, it's a question of missing figure. And it is a question from your past years, 2-3 times it has come. So see, in missing figure question, it's always better that again, because some of the figures are there and some of the figures are not there. Clear? So it's always better. Again, this is how, again, you have your own way of doing the things. But, when you make a format of the cost sheet, it's always better. Half of the things in the cost sheet is done when you make the cost sheet format. All right. So let us just make the cost sheet format, a rough format. So here direct labor cost is given and an information for works overheads is given. Works overheads means factory overheads. Cost of goods sold excluding administrative expenses is given. That means production administration is not there. Inventory account, so you have all the 3 stocks, opening and closing balance. Other data, you have the selling overheads, you have general administration, and you have the sales. Clear? Find out the value of material purchased and then a cost statement. Clear? So there are many ways of doing it. You can, it has to be a backward calculation sometimes. But let me tell you, there are many ways. I mean, you can do it in which other way you want, or it's convenient to you, or, how you understand such question. So it will be, I think it has come in one of my attempts also. So the way I did it, I just tell you, again, you have to follow the method which your study material or the pattern, but this is how also you can do it. So if it's a stock of raw material, then again, it has to be raw material consumed. When raw material stock is there, that means it's raw material consumed. So raw material consumed, opening stock of raw material plus purchases minus closing stock of raw material. Clear? Then you have the direct labor. Direct expenses, I don't see in this question. So you will have prime cost. I'm just making a basic structure of the cost sheet. I'm doing nothing as of now. Then you add the factory overheads. You have the works overheads given. So you will add the factory overhead. You will get gross works cost. Clear? Then you have the WIP stock given. So opening WIP less closing WIP. Clear? I'm making the format as per the question, whatever is given in the question. Then you have the works cost. Clear? To the works cost, we add 4 categories. Production related to administration, quality control, R&D, and primary packing. No such thing is there. That means works cost is also cost of production. Clear? Because no 4 categories is given in the question. Cost of production. Then you add opening stock of WIP. Sorry, finished goods. 1 minute. Opening finished goods. Then you deduct closing finished goods and you get COGS. Clear? I hope so far so clear. After COGS, we have the selling expense, and then we add general administration. Then we will having cost of sales. All right. We don't know the profit. Add profit, but we know the sales. So this is the basic format I have made looking at the question. Clear? I think so far so clear. Now let us just place the figures, what all is given in the question. I'll just place the figures. So I have the direct labor cost given first. Direct labor, 17,500. I'm just placing the figures in the format. what all is being given. Works overheads, we'll take it later. Cost of goods sold. Cost of goods sold is given to you 56,000. Cost of goods sold is given to you 56,000. Raw material opening stock is given to you 8,000. Purchase is not given. Closing stock is given 10,600. Clear? So raw material consumed will come. Direct labor is given. Prime cost we don't know because purchases we don't know. Then the WIP stock we can place 10,500 and closing is 14,500. Clear? So opening and closing. Then finished goods stock we have opening 17,600 and closing is 19,000. Closing is 19,000. See, I'm just placing the figures in the format. I have not even started yet. Selling expense 3,500. So selling expense is 3,500. It's given in the question. General administration is 2,500. Selling 35, general is 25. COS is not available as of now. Sales is 75,000. Clear? So students, this information is given to us and rest is not given. So we have to find out, all right? So we'll start with the first line of the question. Direct labor cost is 17,500 and it is 175% of works overhead. That means 17,500 is 175%. So if 175%, so if factory overhead is 1 rupee, direct labor cost is 1.75. It's 175%. So then how much will be 100%? If direct labor 17,500 is 175%, that means works overhead is 100%. So whatever is works overhead, direct labor is 175%. Clear? So can you calculate 100%? So how you will do? 17,500 into 100 divided by 175. Works overhead come to 10,000. How you did it? 17,500 is how much? It's 175%. All right. How much you want? You want 100%. Because 100% is factory overhead. So if factory overhead is 100, direct labor is 175. And 175 is 17,500. So how much is 100%? That comes out to 10,000. So factory overhead comes out to 10,000 rupees. I hope you have understood this. Clear? It's not 1 lakh, it's 10,000. So if factory overhead is 100, direct labor is 175. So if direct labor is 17,500, how much is factory overhead? It will be 10,000. So factory overhead is 10,000. I hope you have understood. Clear? This is the way we have calculated. Now students, let us see what is the point where we can calculate more of the information. Let us start from backwards. See, here we cannot calculate. Some of the figures are missing. Here we can calculate. Opening stock of finished goods, closing we have, COGS we have, and then we will be adding selling and administration. So we can find COS. COGS plus selling plus administration. We can start with COS first because all the things are given. So we can safely start COS. So 56,000 plus 3,500 plus 2,500. 62,000 is COS. Cost of sales is 62,000. Can't we calculate profit now? Let us complete the cost sheet as in how we are able to get the figures. So COS is 62,000. Sales we have got 75,000. 13,000 is profit, the balancing figure. This we have found, this we have found. See the arrow ones we have found. Clear? So we had the COGS, we had selling in general. So I started from backwards. We got COS 62,000 and profit we got as the balancing figure because sales we had. I hope this much is clear to you. All right. So see, the last part is clear. We have all the figures. Now we will go backwards. We will go backwards to find the COP. All right. We'll start from COGS backwards. So we will reverse the sign. Whenever we will go backward, we will reverse the sign. Plus minus होगा और minus plus हो जाएगा. So 56,000 plus closing stock minus opening stock. Students, whenever we go backward calculation, the signs will be reversed. जो plus किया था वो minus होगा, जो minus होता है वो plus होगा. All right. So 56,000 plus closing stock minus opening stock. See, this is one way of doing it. Clear? So you can make the backward format also. You can make the format upside down also. You can start from sales, then profit, then COS. That way also you can do. I repeat, I have made the straight format. You can make the format backwards, upside down also. You can start with sales, then profit, then cost of sales, and raw material at the last. You can just reverse the cost sheet format also. But this, if you are writing like this, then you have to go backwards. Clear? So 56,000 plus 19,000 minus 17,600. So cost of production is 57,400. Cost of production is 57,400. We have done backward calculation. So COGS आप नॉर्मली क्लोजिंग स्टॉक माइनस करते हो, बट बैकवर्ड जाओगे तो क्लोजिंग प्लस होगा और ओपनिंग माइनस कर दो. यू विल रीच अप टू कॉस्ट ऑफ प्रोडक्शन. देन अगेन वर्क बैकवर्ड्स. Cost of production or the works cost. You have 57,400. Then again add closing WIP and less opening WIP. Work backwards. You are going backwards. So reverse the sign. Plus 14,500 minus 10,500. So 61,400 is your gross works cost. 61,400 is your gross works cost. Students, I hope you're able to understand. I'm going very slow so that you understand. 61,400 is gross works cost. We are working backwards. We are going backwards. 61,400. We have reached up to gross works cost. We started from COGS because there 3-4 figures were available. So we could easily calculate COS. Then again, we have the factory overheads. Again, work backwards. Gross works cost minus factory overheads. Work backwards, so you will reverse the sign. Prime cost is 51,400. Reverse up. Check bhi karo aap. Prime cost mein you add factory overheads, you will get gross works cost. Clear? Work backwards, we have reached up to prime cost. We have reached up to prime cost. 51,400 is prime cost. Clear? I hope everybody has reached up to prime cost. So I'm just erasing it off so that it will be more clear. Okay. I hope you have reached up to prime cost. Very good. I hope you are understanding. That's good. After prime cost, again we are working backwards. Prime cost में direct labor less करो. Reverse, direct labor normally add होता है, but we are working backwards. So prime cost में direct labor less करो. 17,500. Your raw material consumed comes to 33,900. Total raw material consumed is 33,900. 33,900. 33,900 is raw material consumed. So let me write it over here. Raw material consumed. Opening stock is given 8,000. Purchases is not given. We add the purchases. We deduct closing stock. Closing stock is given 10,600. And we have got the raw material consumed 33,900. So you have the raw material consumed. You have the closing stock, you have the opening stock. Can't you calculate purchases? Again, go backwards. Closing stock, you add Opening you deduct, you will get the purchases. So 33,900, 33,900 plus closing stock plus 10,600. I repeat, when we go backwards, the signs are reversed. जो प्लस किया है वो माइनस करो, जो माइनस किया है वो प्लस करो, रिवर्स करो. Minus opening stock 8,000. 36,500 is your raw material purchases. Please cross check the answer, students. I hope it should be correct. 36,500 is your raw material purchases. So I have made the format straight. You can make the format reverse also. You can start from sales and end with RMC. I have made a normal format starting from RMC and end with sales. And I've just placed the figures, and then I have actually found out where is the starting point. Where 2 figures are given, you can find the third one. That is the starting point you should take. Clear? 36,500 is your C. So they want the raw material purchase first and then the cost statement. We have actually done out of cost statement only. So both the parts have been covered here. Clear? So this is how we do it. Students, I hope you have understood this question. I hope this should be very, very clear. And this question has come many times in your intermediate examination. So very good practice question. Yes, you can. You have to show the working note. First working note should be how you have calculated factory overheads. Without working note, you cannot do any question. Here also, you have to do the question. So first, you have to make the working note to how you calculated factory overheads, 175%. Then you have to show the working note how you're calculating COS, So wherever required, you should show the calculation of the, wherever calculation, you should form part of the working note. It's always better. Clear? I hope you have understood. All right, let us move on. Okay, so this is this is how it has been done. See, they have reversed the format. They have started from cost of goods sold and reverse they have done. So this is also the way you can do. But raw material purchases, so RMC at the last and COGS at the top. But I have made the format same, so you can do any which way. Clear? But the way it should be very clear to you. So whatever way you are convenient, that way you should basically form. All right. So this is the cost statement. Then once you had the raw material purchases, then you make a proper cost statement. So we have made one cost statement only, and then you can show working notes. So this is the way you can do it. So they have made the raw material consumed working note. They have made a statement, the reverse one, and then they have shown the proper format again. So any which way you can do. Clear? So this is a question from the previous year question paper. So we have done the questions from study material. We have done the question from RTP, a similar question. And we have done a question from the previous year question paper. So that again was the query. So I think we have lived up to that. Okay, so we have another illustration. This is also a good illustration, a good one to practice. A Limited has capacity to produce 1 lakh units every month. Clear? It's works cost. So they have given straight away the works cost at different level of capacity. So if you function at 10% level, the works cost per unit will be 400. 20%, the works cost will be 390 and so on. So at different levels, they have given the works cost. Clear? So please take a note of this question, students. Okay. So fixed administration expenses they have given, fixed marketing expenses they have given, and they're all per month. So they are per month, and we have to make the cost sheet for per month only. The variable distribution cost is also given. So fixed costs are given as total per month and variable are given per unit. It should be like this only. Variable we generally signify and denote per month or per unit. And fixed, generally we use in total, whether per month or per annum, whatever. It can sell 100% of its output at 500 per unit, provided it incurs the following expenditure. All right. So if they function at 100%, okay. So if they function at 100% capacity, they will be, that means full 1 lakh units they produce. So they will be able to sell only with the help of extra expenses. But if they can market 30% of its output, that means if they function only at 30% capacity, that means 30,000 units. Entire capacity is 1 lakh. So they are saying if they sell 100% of its output, that means if they if they operate at 100% production level, that is 1 lakh maximum, then these extra expenses will also be incurred. But if they function and operate at 30% capacity, that means 30,000 units only, then they can sell at 550 per unit, but without incurring any of the expenses above. So these expenses are only if they function at 100% level of output. So we have to make a cost sheet for the month. Total cost and profit at 30% and 100% capacity level. So two capacity levels we have to make. So what data is given as per second last lengthy one question. How will we know in which overhead it will go? You should know. That is what you have to learn. Nobody is going to tell you. See, in cost sheet, the main thing is the classification. Which item, which cost will go to which overhead? How can you say, how will we know? You have to know. That is what you learn. That is what you have to learn. You have to practice. And that will come out of practice only. Solve as many questions as possible. So once you have done 5 to 6 questions, I'm telling you, you will know that which overhead will go to which function, which classification. It will only come out of practice. Just after seeing the question, oh, इतना लंबा question है, कैसे होगा, कितना difficult है, ऐसे सीए के क्वेश्चंस नहीं होते बेटा. Unless you do it, then only you will be able to understand. And it comes only out of practice. So once you are able to do 5 to 6 questions, you will yourself come to know, okay, this goes to factory, this goes to production, this goes to selling, this goes to distribution. It's only out of practice you will be able to learn. Nobody can teach you this. It has to be out of practice. Okay, so we have to make basically two cost sheet, one for 30% and another for 100%. Clear? So if the capacity is 1 lakh units, so the units 30% is 30,000 and for 100% is 1 lakh. So these are the units. Clear? So we can have you have to calculate the cost and the profit. So we can start with sales only. Or you can start with the works cost. We have to make a cost sheet. So we'll be starting with the works cost 30% and 100%. So let's start with works cost per unit. 30% is 380 and 100% is 310. So 30% works cost. We'll be starting works cost. They have given us works cost 380 per unit and 310 per unit. So you can please calculate total works cost. Give me the total works cost. Calculate the total works cost. Then we will be adding. Calculate the total works cost, please, and just give me. So there are no stocks, nothing. So we'll just be adding to the works cost. How much is the works cost? Can I have the works cost, please? Should I calculate? 30,000 into 380. All right, so it's 11. All right, so this is the total works cost. Yes. 1 crore and 14 lakhs. And what about this, the second one at 100%? How much is the works cost? 1 lakh into 310. 3 crore and 10 lakhs. Clear? So this is the works cost. To the works cost, we will be adding fixed administration. There is no, cost of production, or there is no breakup asset given in the question. So no cost of goods sold, no stock is there. So we'll be just adding to the works cost. Fixed administration. Fixed administration is 1,50,000 and 2,50,000 per month. So just add the fixed administration. Also calculate per unit also. See here, units are given. You must calculate per unit also. We want, wherever units are given in the question, you must make a column for per unit. So here also, it will be 4 columns apart from the particulars. So total 30,000 per unit, total 1 lakh and per unit. You should make the per unit column also. So 1,50,000 fixed will be fixed. Clear? Whether it's 30% or 100%, that is the property of fixed. Students, fixed administration and fixed marketing. That means whether you operate at 10%, 20%, 30% or 100%, fixed charges will remain the same. Be careful. Fixed charges, administration and fixed marketing will remain the same in both the categories. Whether you are operating at 30% or 100%, you have to pay total fixed charges. Clear? Variable distribution will be as per units because it's per unit. So variable cost will be per unit, but fixed cost will remain fixed. All right. 30 per unit. So variable distribution cost. Add variable distribution cost. 30 into 3 lakh. 30 into 3 lakh. And 30 into 1 lakh. Sorry, 30,000. I'm sorry, it's 30,000. Units are 30,000. So 30 into 30,000 and 30 into 1 lakh. So variable distribution is per unit. That will be multiplied by respective units. But fixed will be fixed irrespective of the units. Clear? Now we are coming to only 100% wala cost. So now these items, 4 items we will be considering, that will be only in the 100%. So 100% output is sold at 500, provides it incurs the following expenditure. Gift item costing 30 per unit of sale, 30 per unit. So gifts will not be added here, but here it will be added 30 into 1 lakh. So if you want to sell 1 lakh units, if you want to operate at 100%, you have to incur extra expenses. तभी आप 1 lakh का output sell कर पाओगे. But these expenses you don't require at 30%. Clear? So gifts जो है वो 30% में नहीं होंगे, 100% होगा तभी होंगे आपके. It has lucky draws every month. First prize 50, second prize 25. Third prize 10,000 and 3 consolation prizes. So total कितना हुआ? 50 plus 25 75,000. 75 plus 10 85 and 3 consolation prizes of 5,000. That means 15,000 की consolation prizes. So 1 lakh. So your lucky draw every month. That means lucky draw. So lucky draw expenses not at 30%, but 1 lakh will be at 100%. Just cross-check the figures, please. Please calculate per unit cost also, side by side. Now, spends 1 lakh on refreshments served every month. So, refreshments. Refreshments again, no at 30%, but you have to incur only when you are selling 1 lakh. So 1 lakh refreshments will also be there. It's one every month. So you are taking already every month. This cost sheet is made for 1 month only. Clear? So don't multiply by 12. Expenses at 100% will go to distribution. Yes, I mean, see, in this, there is no other, category wise. You can write the categories, distribution, or you can just add everything to works cost because there are no separate categories given as such. Yes, but otherwise they are, all these are after COGS only. These expenses are not part of cost of production. Cost of production, that means works cost only. Rest all are selling and distribution and marketing and everything. Clear? So basically these are actually selling and distribution expenses only. So that's why we are adding it together. It sponsors a television program every week at a cost of 20 lakh per month. So again, this television program expenses also 20 lakh they are spending every month. So again, we want the month expenses. So I think that's all. 4 categories, 4 expenses they are incurring. Only if they want to operate and sell 100% of their output, they have to incur these extra expenses. All right, so these are so then you can have the cost of sales. That means these are cost of sales or total cost. So please calculate for 30 and 100. Give me the cost of sales for 30% and 100%. Lucky draw is 90,000. How it's 90? 50 plus 25, 75 plus 10, 85. 3 consolation prizes of 5,000 each. So that means 15,000. 85 plus 15 is 1 lakh. How it comes to 90,000? I think it's 1 lakh. Please check the figures. I hope it's 1 lakh only, students. It's written in the question. Please read the question. It can market 30% of its output without incurring any of the expenses 1 to D above. Please read the question and then ask the query. At least read the question properly first. So these 4 expenses are incurred only if they operate at 100% output. They are not required at 30%. It's mentioned in the question. Clear? How much is the total cost? How much is total cost of sales? Can anybody give me the answer? Total cost? 3 crore 96 lakh. One answer is coming. I hope it's correct. 3 crore 96 lakh is the answer. 3 crore. And then for 30%? Anybody can give me for 30%, please? Let me just add 1 crore 14 lakhs. 1 crore 14 lakhs. Okay. So I'm okay. I've got the figures. 1 lakhs and 3 crore 96 lakhs. I hope the figures are correct. I'm taking from your calculation. Clear? So this is the cost of sales, the total cost of sales. Sales we have given in the question. 550 per unit. So 550 into 30,000. So 30% is sold at 550 and 1 lakh is sold for 500. Clear? So 550 per unit is sold when we operate at 30% and 500 per unit is sold when we operate at 1 lakh. So please calculate the profit, add profit. Profit will be the balancing figure. Calculate the profit, which will be the balancing figure. Can I have the profit again per unit? Everything should be per unit also. Please calculate per unit also along with it. Can I have the profit, please? Profit for 30% and 100%. Come on. How much will be the profit at 30%? Any answers or should I calculate? All right. How much it is? How much is the profit? I'm not clear about the profit. Can anybody tell me the profit? Sales is given. COS we have. Can I have the profit? Lucky draw is 1 lakh, not 90,000. Please calculate again. Okay, profit somebody has given. 38 lakh is the profit. 38 lakh is the profit for 30%. Okay. How much is for 1 lakh? Okay, so 10. I can't read it properly. 4 lakh. 1 crore 4 lakh. All right, so this supposedly should be the profit. Calculate per unit also. Divide everything by 30,000 units to calculate per unit. And similarly, divide every cost by 1 lakh units to calculate the per unit cost under 100% capacity. You should calculate per unit also. All right, so this is the profit. Question has not asked for per unit cost sheet. Question will never ask. You have to calculate per unit. I repeat, whether it's mentioned in the question or not, you must calculate total and per unit always whenever units are given to you. Whenever units are given, you should always calculate per unit also. It's always better. It gives a good impression that you know your costing. You know the fundamentals. All right. Everything is not mentioned. Be a CA student. It's not any graduation level. You will do exactly what you have to. You have to make it a professional approach. It's not only exam. You're not studying for exams. You are studying to become a professional. So make it a habit to, do it a professional way of approach. So here also see per unit is given. All right. So follow the pattern of your study material and it will always say whenever per units are given, you must always calculate per unit. All right. Yes. So it's per unit also and the total. So we started with works cost. We added all the items. This again is happening only at 100%. You get the cost of sales, you add the profit and you get the sales. So basically they are selling and distribution expenses extra which you have to incur. So students, that's all for the cost sheet session. I hope you have understood the concept. You have understood the classification. We have done different forms of question, the basic cost sheet, the elaborate cost sheet question, which has helped you to get the classification, what should go where. All right. And then we have done a missing figure question. And then we have done this question, which is a different form of a question, a different way to do a cost sheet question. So gifts again, gifts is a selling expense. See, anything which you are paying, discounts and gifts, free gifts, samples, advertisements, anything which you are incurring to promote the sales is selling expense. गिफ्ट्स दे रहे हो, डिस्काउंट दे रहे हो, हैम्पर्स दे रहे हो, सैंपल्स दे रहे हो, एडवर्टाइजमेंट्स कर रहे हो, just to promote the sales, that is selling overhead. All right, so that will be a selling one. So students, that's all for today. Happy learning and happy studying. We'll meet you for with another unit, another module. So till then, have good practice and just practice whatever has been done, and this PPT will be shared so you can practice it later also again. All right, thank you so much. Have a good day.